Good morning. We will pay attention to the elements of the accounting equation today. There are three elements: assets, liabilities, and equity. Assets are the possessions of the business that belong to the business. Liabilities are the claims of creditors or financial institutions against the entity because the entity owe them money. Equity is the interest of the owner in the business, his interest in the assets of the entity. That means all the assets belong to him minus all the liabilities that he is responsible for. We can also say equity is the total amount that the owner invested in the business, and that is the amount that the business owes the owner. The accounting equation can be expressed as owner's equity equals assets minus liability. So owner's equity, the business belongs to the owner. What belongs to him? All the assets, and he's responsible for the liabilities. So the value of the assets less the liabilities is what belongs to the owner. Variations can be assets equals owner's equity plus liabilities, because all the assets are provided by money that the owner contributed or money that was borrowed. Assets increase on the debit side, expenses increase on the debit side. So these is your basic rules that you must understand. If you don't know these basic rules, you will not be able to do accounting. Liabilities increase on the credit side, income increases on the credit side, and owner's equity increase on the credit side. The left-hand side of the account is the debit side, and the right-hand side is the credit side. Okay, so if we look in the general journal, we will see that assets and expenses always have debit balances, and they increase on the debit side. So to remember which accounts increase on the debit and credit side, we will use Alice. The first letter of Alice and the last letter of Alice. Alice is assets, E is expenses. They will increase on the debit side. The letters inside the word, that means liabilities, income, capital, will increase on the credit side, and the balance will always be on the credit side. So owner's equity is like capital, and owner's equity decreases on the debit side and increase on the credit side. Now there's four things that affect owner's equity. If the owner gives capital to the business, the capital account is credited, the business owes the owner more, so the equity increases. Drawings is when the owner takes goods or money from the business. That means the business owes him less money, so therefore the equity will decrease. When we have income increases profits, so therefore the equity will increase because the owner will get more profits. Expenses decrease the profits, so therefore the expenses will decrease the equity. The financial position in the balance sheet can be presented by the basic accounting equation. The two sides of the equation must always be equal. Therefore, the total assets must equal the total equity plus liabilities, because assets are equal to the total amount of the money that the owner provided in the business plus the total amount that's owed to financial institutions or creditors. The net asset value represents the portion by which the assets exceed the liabilities. So therefore, net asset value equals assets minus liabilities. the balance sheet is divided into two sections. The top part of the balance sheet is all your assets. And when you add up the assets, the total of all your assets must equal the bottom part of the balance sheet. And the bottom part consists of equity and liabilities. And if you think logically about it, where did the money come from to buy the assets? The owner provided it or they borrowed it. Therefore, assets must equal total equity and liabilities. Assets equals owner's equity plus liabilities. They are recorded in the balance sheet. The equity accounts will also be recorded in the income statement. So we record all our expenses and income in the income statement, because we determine whether we made a profit or a loss. Assets is therefore owner's equity plus liabilities. Assets increase on the debit side, expenses increase on the debit side, liabilities increase on the credit side, income increases on the credit side, and owner's equity increase on the credit side.